Welcome back to XRP Update, your trusted source for the latest XRP, Ripple, and digital asset news. If you enjoy factual discussions, market analysis, and the biggest development shaping the future of crypto, make sure you subscribe and turn on notifications. Today we're talking about a topic that has investors debating across social media: the simple math behind XRP at 3 digits. It's not a dream. We'll break down the arguments, the growing institutional interest, and why many people believe the current price may not reflect XRP's long-term potential. As always, this is for information and entertainment purposes only and not financial advice. Everybody seems to have an opinion about XRP. Some people say the opportunity has already passed, while others believe the biggest move hasn't even started yet. Recently, one popular discussion pointed out a simple comparison between today's global financial system and what blockchain technology could eventually replace. The idea isn't based on emotion alone, it's based on the enormous size of worldwide payment markets. When people hear that XRP could someday reach 3 digits, many immediately dismiss it as impossible. But supporters argue that before rejecting the idea, investors should understand the scale of the markets XRP is attempting to serve. Think about international payments today. Global cross-border transactions move massive amounts of money every year. Traditional systems often involve multiple banks acting as intermediaries, settlement delays that can last from 1 to several days, and fees that businesses and consumers pay every single time money moves across borders. Those costs add up to billions of dollars annually. XRP supporters believe that if a faster and cheaper system becomes widely adopted, even capturing a small percentage of that activity could dramatically increase demand for liquidity on the XRP ledger. That's where many people say the simple math comes into play. If a network can settle transactions within seconds instead of days, and do so at a tiny fraction of the cost, financial institutions naturally have an incentive to explore it. Even if only a relatively small share of traditional payment volume shifted onto blockchain infrastructure, the value flowing through that ecosystem could be enormous. Supporters argue that investors often focus only on today's market price, instead of considering what widespread utility could look like years from now. Another important point frequently discussed is regulation. Many analysts believe that large financial institutions have been cautious because they need legal clarity before committing significant resources. Banks, payment companies, and investment firms generally operate under strict compliance requirements. If regulations become clearer and provide a framework for digital assets, institutional participation could increase substantially. Many XRP investors believe that this moment, not speculation alone, could become the catalyst that changes how the market values the asset. This is why some members of the community say today's price may not represent XRP's future value. Their argument is that price discovery cannot fully happen until institutions are able and willing to use blockchain technology at scale. Whether that happens quickly or gradually remains uncertain, but supporters believe the market is waiting for adoption rather than simply hype. They see regulation as opening the door for broader participation instead of closing it. Critics often respond by saying they would never let millions of people become rich from one digital asset. Supporters answer that this perspective misunderstands the size of global financial markets. Compared with trillions of dollars moving through international finance, the profits earned by individual investors could represent only a tiny fraction of overall economic activity. They argue that what seems like a massive gain to one person may be insignificant compared with the scale of worldwide payment systems. Another major discussion centers on tokenization and digital financial infrastructure. More financial institutions are exploring how real-world assets, stablecoins, and digital representations of value can move on blockchain networks. Industry representatives have suggested that conversations are shifting away from experimentation and toward practical settlement solutions. If tokenized assets continue to expand rapidly, networks capable of supporting those transactions could benefit from increasing activity over time. Liquidity is another word that appears repeatedly in these debates. Markets with deeper liquidity generally handle larger transactions more efficiently. Many analysts believe liquidity drives valuation across financial markets, including cryptocurrencies. If significant institutional capital eventually enters digital assets, supporters argue that the entire sector could experience a major repricing. That does not guarantee any specific price target, but it explains why some investors focus on long-term adoption rather than short-term volatility. Macroeconomic conditions also play a role. Some market observers believe that global liquidity cycles influence crypto prices more than many investors realize. According to this view, periods of expanding liquidity often support risk assets, while tighter conditions create pressure across markets. If economic policy, investment flows, and financial conditions become more favorable, digital assets could benefit alongside other growth sectors. At the same time, experienced investors often remind people that markets move in cycles. The moments when sentiment is extremely negative sometimes create opportunities, while periods of excitement can bring excessive optimism. History has shown that buying decisions driven entirely by fear or hype rarely produce consistent results. Patience and disciplined research remain essential regardless of whether someone is bullish or bearish on XRP. Institutional products such as exchange-traded funds have also attracted attention. Market participants closely watch fund flows because they can provide insight into investor demand. Positive inflows during difficult market conditions may suggest continuing interest from certain segments of the investment community. While ETF activity alone does not determine long-term value, it contributes another piece to the broader picture that analysts monitor. Many commentators also predict that the cryptocurrency industry will become more selective over time. Instead of thousands of digital assets competing equally, they believe regulations and real-world adoption could eventually separate projects with sustainable utility from those driven primarily by speculation. If that happens, only a smaller group of established digital assets may attract significant institutional attention. Supporters naturally believe XRP could be among those leading projects, while critics remain unconvinced. Artificial intelligence has introduced another interesting discussion. Some analysts argue that as AI systems become more powerful, secure methods of verifying transactions and ownership will become increasingly important. Blockchain technology could potentially provide part of that solution by creating transparent and verifiable records. If AI and blockchain evolve together, entirely new use cases could emerge that today's market has not yet fully priced in. Ultimately, the argument for XRP reaching 3 digits is based on adoption, liquidity, infrastructure development, and regulatory progress rather than a single event. None of these outcomes are guaranteed, and every investment carries risk. However, supporters believe that dismissing the possibility without considering the scale of global finance ignores the broader picture. Whether the future proves the bulls or the skeptics correct will depend on technology, regulation, and real-world implementation. One thing is certain: the conversation around XRP continues to grow, and the next few years could be some of the most important in the history of digital assets. If you enjoyed today's update, subscribe to XRP Update. Leave your thoughts in the comments, and we'll see you in the next video.